Welcome to the Scam Economy with your host, Matt Binder.
Welcome everyone to Scam Economy, your number one source for crypto FUD. I am your host, Matt Binder, and on today's episode, we will be diving into Coinbase, America's number one crypto exchange, and the headlines they've been generating over these past few weeks. Specifically the ones that they probably aren't too happy about. That's right, Coinbase has faced a number of controversies and just plain old no good news, aka bad news. And we'll be talking about all of that on this week's episode. As always, you can support this show by becoming a paying subscriber over at patreon.com/MattBinder. And by doing that, you help grow this show. Subscribe to the YouTube channel if you're not already watching the video version of this episode there at youtube.com/MattBinder. Follow the Twitch channel over at twitch.tv/MattBinder. Follow me on Twitter at MattBinder and the show itself on Twitter at Scam Economy and scameconomy.com for all the links to the podcast version of this show, such as where you can find it on Apple Podcasts, Spotify, etc. And while you're there, be sure to leave a review on Apple Podcasts or Spotify too. This is one spicy episode today, so let's jump right in. And joining me now, once again, is Ed Zitron, CEO of EZPR and author over at the ez.substack.com newsletter. Ed, great to have you back. You are by far one of the most requested return guests. People seem to love you.
Yeah, it's because I'm always mad. Never calm. It's because I'm always pissed off at all times. Just the fury at all of this crypto shit, or just like breathing. That's kind of how I am in general.
There we go.
Low level mad.
So I guess we should jump right in because there's a lot to talk about and a lot to be low level and probably high level mad at.
Yes.
And that's because today we are talking about Coinbase. And, you know, I've probably mentioned Coinbase over the course of a number of episodes, but I believe this is the first episode where we are really going to focus on Coinbase and Coinbase alone. And for people who are unfamiliar, Coinbase is the largest crypto exchange in the U.S., frankly, probably the largest crypto-centric company in the U.S., period. It's weird because, like, I feel like if you go to Coinbase's website, it sort of feels like a U.S. company, unlike any of the other crypto exchanges do. Like, if you go to, like...
Even FTX kind of looks like right. You know, well, I guess it isn't a U.S. company. It's based in the Bahamas.
Right. Something about, like, Binance's website and FTX, like you said, and all the other exchanges and crypto. It always feels like I'm going to some website where, like, the current design trends, the current UI trends are not in line with what's going on here in the U.S.
You have to flip the language from, like, Russian or something.
Right.
The moment you get, like, 49 ad blockers activate at once.
Right, yeah. And, you know, Google translates, letting you know exactly
immediately pops up.
Right.
But Coinbase is great. Nothing weird happening there. Episode over.
Right. Episode's over. We just wanted to talk about this. All right. Have a good night.
They
wish that was
not
true.
Good, though.
They wish that was true because Coinbase is having a sort of a moment in the spotlight. Like, you know, it always comes up, crypto crash, crypto boom, whatever's going on with crypto, inherently, ostensibly, I guess I should say, you're going to end up mentioning Coinbase. But Coinbase specifically is not having a good time right now. I mean, I guess it all started, and you could correct me if I'm wrong, with the news of the first ever charges against someone for crypto insider trading.
Not the first, the second.
The second, okay.
Actually, me. So technically, I think there was an OpenSea guy who got done first. It was the same guy, SDNY. I forget his name, the same U.S. attorney.
Oh, right.
Same guy who fucked the OpenSea guy up. And read the press release of it. It is basically him going, fuck all of you. I'm going to get you all. I was the first to do it, and then the second to do it. I'm going to be the next one to do it too. Everyone's he is. I really wish I'd have memorized his name. Make me sound less than an idiot. But he was very clearly just saying, like, this is only the beginning. Right.
So the OpenSea one was basically, I guess, to give people a little backing there, because I don't think I covered it on this show. Basically, the guy in charge of featuring different NFT projects on OpenSea's website, which is the by far, in a way, the largest NFT marketplace. The guy who was like in charge of featuring like the featured projects, which you would be featured on OpenSea, you would see a bump in, sales of the NFT project, which means everyone else's, if they own that NFT asset, their NFT value will go up too. So the guy in charge of featuring that stuff decided to, of course, obviously, why wouldn't you, buy into that NFT project while the prices were low, and then feature them and see the value of his NFTs in that project bubble up into exorbitant value, I guess.
Yes, it is literally being an insider and trading off of that information. It is about as blunt as it gets, other than the Coinbase one, where it was like 10 assets and the guy like told his brother. Never understood this one. Why people are like, I'll get away with it. No one ever fucking try. No, like they will get you eventually inside the. It's not like they find out after 5 years and go, oh, yo, it's sod. Better luck next time for us, I guess. Good game. No, they're gonna come and get you and use you to build legal precedent.
Right. I wonder how many
guy is doing right now.
Right. I wonder how many of these guys don't think they'll get caught or don't even think it's a thing because they're dealing in crypto. This isn't your traditional investing. You can't insider trade with these assets. They're just digital coins.
No, but that's the thing. So I think what's happening here isn't necessarily that they broke a new rule. They didn't. Maybe they did, but what seems to be the principal issue here, the number one issue, is that they went and gave that information to other people. Now, I am not a securities lawyer. I'm fairly insecure in general, in fact. So it's just like, I'm not sure I totally understand the law, but it seems to be the big problem was the massive profits, but also the fact that they have you seen I Think You Should Leave?
Yes.
Yeah, so the scene with the insider trading where it's like, money should be good, trade on the, those are probably the texts we're talking about. Because if they start locking up everyone who, I guess it must be that, because what it is the people, the many, many people who have done I invested Andreessen Horowitz and I knew it was going on Coinbase, so I had it ready to sell. There was no insider trading there because they did, unless you went and bought the asset on another exchange beforehand, transferred it to Coinbase and then sold it, you are not insider trading. You were just making money the Andreessen way. Now, the principal issue here is that they very clearly, and as we'll get into, more than just them, most likely, gave people info, probably taking a cut, and said, oh, this is going on Coinbase, fuck yeah, let's make some money, bitch. Woo, we're all going to go get arrested. And it's interesting because I was thinking that it was going to be, oh, shit, they started making it so that it was insider trading if you just knew it was going on Coinbase. That was my big question, because if they do that, they may have to arrest, a lot of VCs. A lot of fucking VCs going to jail. Oh, boy. Oh, me, oh, my. Oh, Sonny. Good golly, Miss Molly, and so on and so forth. But that's not the issue here. It seems that they went, yeah, let's go do this. Let's sell the. Hey, I'm going to pick up more of this with my insider knowledge. I know it's good to buy more of this. and I'm going to put it on the place where I plan to insider trade, and now I'm going to insider trade. Okay, good. Are you all insider? Yep, we're all insider. Because it's the other problem with this is all of this takes place on an immutable fucking ledger, a blockchain, if you will. If you're going to do insider trading, maybe don't go do it in a place where they can track the amateur hour. I mean,
they really
it's
don't
just so
think...
insanely obvious that they get caught.
Right. It's because if you don't publicize your wallet address, there's nothing connecting you to, in the eyes of the public who can check this blockchain, there's nothing connecting your wallet address, like your identity, to that wallet address making the trades. But here's the conundrum here that I don't think these guys really think about, which is it's a pretty big blind spot if you're not thinking about this. When you go to cash out, the exchanges are going to see that, hey, this wallet address is trying to transfer this crypto into real money, USD, and put it into this person's bank account.
I don't even think you need to have taken the money out. And I think it's even dumber than that, because you're completely correct with everything you say. But remember, Coinbase, they KYC, know your customer, everything. So they would have taken this money from these disparate wallets and then sent it to effectively a bank account with their name on it, which is very cool.
Right.
I think that has to, like, the,
you know what though? But here's
this is
one
like
thing.
Ocean's minus 11.
maybe it's Ocean's 11 minus 12 though, to really.
Yeah. Ocean's minus the ability to live a free life.
Right.
Jesus Christ.
But here's the thing though, like let's actually rewind a little bit to sort of get the basics of this case down, because I think there's an extra piece here that isn't quite connecting, and they must have actually, like the lawyers and well, here's the thing. So, and to give myself a little bit of credit here, the U.S. Attorney's Office for the Southern District of New York is calling this, the Coinbase one, the first ever cryptocurrency insider trading tipping scheme. Okay, that's
it. I'm becoming a libertarian. They've insulted my honor.
There we go. No, but
you know what? You're right. You didn't miss anything though. You really didn't miss anything. So if you're wondering how the SDNY found this out, it's probably because Coinbase told them, because they probably subpoenaed them and went, "Hey, we think this happened. If you don't hand this over willingly, we're going to come and get it. And do you really want us going through your emails? Now, could you please hand over this prig?"
They were actually tipped off by that. You're probably familiar with him. He's a big crypto influencer on Twitter, at Kobe. This guy,
they got tipped off.
Yeah. Let's rewind and go to the beginning here, and then we'll get through all of this, because I want to, there's a lot of stuff going on here. So basically,
let's start from the beginning.
The guy's name, the former Coinbase product manager, Ishan Wahi, and his brother Nikhil Wahi, and his friend Samir Ramani. And they all have been charged with 2 crimes. Each been charged with 2 crimes: wire fraud, conspiracy, and wire fraud, both of which revolve around crypto insider trading based on confidential Coinbase information. So Ishan Wahi, as product manager at Coinbase, he would have prior knowledge of which cryptocurrency tokens would be listed on Coinbase. Now, if you go to Coinbase right now, you see a bunch of tokens listed, but there might be some like new upcoming crypto tokens that aren't on Coinbase yet. They're just like, you have to like go through like MetaMask and all that annoying stuff.
It's also guaranteed liquidity. So if you had invested in something and it was only on like a decentralized exchange, or even Binance, which doesn't always have enough volume to really sustain any real selling. In fact, can't imagine all of it's real. But in Coinbase's case, they generally are, you can sell crypto like you would sell a stock. Like they very much, and perhaps the price will change, but it's usually not as fast as another exchange like Binance or what have you. Sorry,
Right,
keep
or-
going
or-
now.
or
That's
even
an
those-
important detail.
Right, or even those crazy, like on Pancake Swap, when you got those like random fly-by-night shit coins pumping and dumping within like a time frame of like 6 to 8 hours.
So I have not talked about Pancake Swap with my mouth before, but I will tell you there were ones I saw that were gone in 15 minutes.
Wait, it was what? What
I'm
was
like
that?
the Roy Batty of Pancake Swap. I sat there and I watched some shit. I watched it on there, watched it on Polygon. I'm a nasty little freak. I was on Pancake Swap early. I remember before Pancake Swap existed, it was Donut Swap. So many people lost money on Donut Swap, but then it went back up. People could have been rich.
Oh, well, you know, we all have our regrets. You know, I was talking about Bitcoin back in like 2009 or whatever. It happens. But so when a new token is added to Coinbase, usually because, like you said, Coinbase makes it so easy and seamless to buy and sell these tokens as if you're just buying and trading stocks instead of having to go through 25 different steps just to, you know, get the stable coin you need to then go ahead and buy whatever random shit coin you're trying to get a hold of. So when these new coins get added to Coinbase, they usually see a large boost in their value. There's like a Coinbase listing boom. So
And then there is a bust.
right.
That is an important detail to add.
Right.
There is a boom and then a bust.
Right.
Every single goddamn time.
Right.
Please continue.
So what he would do was, when he knew these coins were going to be added, he would tell his brother and his friend about it before they were publicly announced to be listed, which means they would be able to buy into these tokens before the official Coinbase announcement and get in before the value of these tokens would temporarily rise in value. Apparently, his brother and his friend allegedly bought at least 25 different crypto assets on at least 14 different occasions prior to the announcement that the token would be added to Coinbase. The scheme,
just have one.
And here's the thing too, like, kind of low amount of money for what you usually hear for this stuff. The scheme allegedly made the three approximately $1.5 million in realized and unrealized gains. So they didn't even get 1.5 million
Didn't even
USD.
cash out.
Yeah. And so this Department of Justice says they were tipped off by this crypto influencer at Kobe on Twitter, who back in April of 2022, which is just a few months ago, found an Ethereum wallet that had constantly invested hundreds of thousands of dollars worth of crypto approximately 24 hours before each of these tokens would be officially announced for listing by Coinbase. So after seeing Kobe's tweet, Coinbase then also launched their own internal investigation, and in May, they informed their former product manager, Ishan Wahi, that they wanted him to attend an in-person meeting in 5 days, after the Monday after the upcoming weekend or whatever. So apparently, the day before that May 16th meeting, on May 15th, Wahi booked a one-way flight to India, but was stopped. But was stopped by law enforcement prior to boarding. His brother was also picked up. Last I saw, and by the way, I'm reading from my own coverage of this from in Mashable from last month. His friend at the time was on the lam still. I don't know if they've picked him up yet, but I'm sure he didn't get far. And
why would you not fucking drive, you dipshit?
Right.
Why would you not get in your car and drive the most? Actually, no, you wouldn't make it through customs.
I mean, I gotta think
you might
that,
make it through Mexican. Mexican
I
customs, maybe. I'm not familiar with trying to illegally cross the border.
Yeah.
So
neither am I.
Yeah, of course. Neither of us have ever. Anywho, but it's very much something where it's like, what was the fucking plan here? But every time these criminals always get too greedy. The fact they had unrealized gains means that they definitely were trying to do something smart. They were like, oh, we won't cash out all of it. How about this? You cash out when you're out of the country.
Right, yeah.
Or perhaps you don't cash out at all and you take all of the asset, the USDC perhaps. And I'm just saying, like, if you're going to be a huge piece of shit criminal stealing from a US exchange or any exchange, let's be smart about it. Come on, mate. Like, but what's great about that as well is Coinbase they tried to be like, well, not a big deal. We helped you out. Everything's good. And the SEC went, actually, we're fucking not done. Right. We have, and I don't have them in front of me, and you might have them, but they said that 9 different tokens were now being considered unregistered securities. One of them,
right.
I forget exactly which they were, but nevertheless, whatever they are, none of these coins do anything anyway. There's just random letters. Just imagine 3 or 4 letters together. You'll probably get it right.
Right. I could read some of them, but it's honestly
please.
AMP, RLY, which I guess you would pronounce as really, DDX, XYO, RGT, LCX, Power, but without the E, so POWR, DFX, and KROM, KROM. I mean, I struggle
Sounds like someone's trying to touch type, but their fingers went in the wrong place.
I mean, I struggle to see, honestly, why Coinbase, again, which is supposed to be like the shining beacon of crypto exchanges where like, oh, if it's listed on Coinbase, you know it's legit. Why they would list these tokens, which honestly, I have never even heard of. Like if you go to Coinbase right now and go to their website and you see like the top tokens on there, even if they're not tokens you see or hear about every single day, these are tokens you've probably at least come across at some point. Like the top tokens on there right now: Bitcoin, Ethereum, Ethereum 2, Tether, USD Coin, BNB, XRP, Binance USD, Cardano, Solana, Dogecoin, Polkadot, Shiba Inu, Avalanche, DAI, Polygon, Tron, Uniswap, Wrap Bitcoin. I could keep going and going, Litecoin. But I mean, you've at least heard of these in passing. Like, you get why they would be on Coinbase. I mean, frankly, none of them are worth anything.
I'm just
They're
following a hunch here, but I picked one of the tokens, Rally, investors, Andreessen Horowitz Crypto, Coinbase Ventures. Just gonna get, let's see, Power. Never heard of Power before. Investors, crypto. Let's see. Maybe I'm wrong. Power Ledger. Interesting. So let's see. I might be wrong. Maybe these aren't Coin. You know what? I was wrong on Power, so I'm just going to pretend that I was right. Otherwise,
well, the fact that one of them was even. I mean, these are all like fly by night. Who the fuck's ever heard of them?
It doesn't really matter. But what's interesting to me is why these 9. Because were they the ones being traded? I'm not sure, but it definitely seems like it was them. Basically, SDNY going, yeah, you traded with these in the way that someone could, with the security. In fact, we want to know more. And then not long after, the SEC said they were investigating. They're investigating whether Coinbase may have indeed sold unregistered securities. If that is proven true, if the SEC justifies themselves, this entire industry is triple-decker fucked on almost every level. It will turn every investment that every VC has made into those tokens alone into just poison. On top of that, a lot of people are going to have to call their lawyers just right off the bat. But also, this will be legal precedent that we use to close a bunch of other ones. They're not going to... The SEC generally does not start pissing on people if they think they have a weak case. But what's important to add is the U.S. charge, reading Bloomberg here, U.S. charge against a former Coinbase Global Inc. employee may not be the only instance of insider trading at the cryptocurrency exchange, according to a new study. Some traders appear to have snapped up tokens ahead of 10 to 25% or 15 to 37 Coinbase listings since 2018, wrote 3 academics at the University of Technology. So, if that's the case, someone's going to jail. Someone senior. Because imagine if 10 to 25% of stocks listed on Robinhood were insider traded on. That would make, if it was a Robinhood focused thing, that would be the end. If this ends up being anything close to true, this is also fucking terrible. Also completely obvious this would happen.
Right.
How did anyone not see this one coming? I'm honestly surprised it took this long. But it's, I mean, I completely, I could believe this was true. I could believe this was overblown. Either or. Like, I could see it, but I'm more likely to believe that not one guy, I don't believe one guy was like, oh, I've had this idea for the first time. And if you're hearing this and saying, well, no, maybe only one guy was that stupid, I really encourage you to type cryptocurrency into Twitter. Read everything for 10 minutes and come back and tell me that this is like, to be fair, I imagine it's not that great with the stock market either. This is, I don't even know how to show the scale of this. So this would be like the fucking NASDAQ. If the NASDAQ insider traded 10% of their listings, there would be fucking consequences to the fucking moon. People would be in handcuffs. In fact, I'd argue they're not taking this seriously enough.
Right.
They may want more evidence, but when they get it, if this is true, don't know if it's Brian Armstrong, but someone senior at Coinbase is gonna have to enjoy a smaller bedroom for a few years, because this is criminal. Like, this is no longer, it's just, we're just bad at securities. This is criminal action.
Right.
I ain't no lawyer, but I know insider trading's illegal, and I know this level is fucking crazy. Like, this is not, there is no comparison.
You know what's really
other than just the NASDAQ.
You know what's funny about this latest news from Bloomberg that you just from Bloomberg, Justina Lee wrote the piece about this Coinbase insider trading being much larger, and not this one product manager that formerly was with the company. The fact that, remember, I was just rewind like 5 minutes and remember when I was talking about how that crypto influencer on Twitter at Kobe tipped off the whole investigation by looking up these wallets and when they made these purchases. Well, fast forward to when the arrests were made just a few months later, Coinbase put out a blog post basically explaining the whole situation, and like they were like victoriously like chest thumping as if it was on them. Like, they're the ones who, on their own, decided, hey, something's up with what's going on with our product manager here.
Guys.
Yeah. And, I think they were like, our internal systems worked or whatever. But it's the whole thing was tipped off by a third party completely. Coinbase's systems, whatever they are, if they even exist, did not trip by whatever this product manager was doing, because
you think they'd monitor their employees' accounts, right?
Right, like, but also this is. I don't want to go all over the place, but let's finish this thought first. So on top of them saying like this product manager that the big story broke in July 21st, I think the news broke of the arrest and everything. Now we know, less than a month later, that they should be, if they really do have these great security systems, they should be thumping that chest and dropping a new blog post every other day saying another Coinbase employee just got arrested, because this is happening all the time. And now here's the thing that's interesting to me. Now, the product manager, who is the only actual person we could put a face to this insider trading scheme going on inside Coinbase, he apparently, from my understanding and reading of everything, he did not buy or invest or whatever you want to call it, any of this crypto. He basically tipped off the information, insider trading tips, to his brother and his friend, who then made the purchases. Now, being that these were not listed on Coinbase yet, these purchases then obviously had to happen outside of Coinbase's exchange, likely through a platform that we just spoke about before, a decentralized platform like PancakeSwap, which means there really is no like Coinbase oversight on these purchases going on. So
I disagree.
yeah, okay, go ahead. No, please. I'm just spitballing here. I could
There's
be
a very
100% wrong.
simple fail point here. How are they not just looking at any account tied to anyone who works with them? Just real simple. Just, hey, you seem to be getting a lot of tokens coming in.
But maybe
immediately.
Maybe he didn't get any. I don't think his account was involved. That's the thing.
Even if, okay, then, I see your point. So if it was another person. Okay,
like he's
so something they didn't know.
Like he's using his knowledge, for example, through internal documents saying, because as part of his job, according to how I'm understanding this, he needed to know what was going to be listed in the upcoming, whatever, days, weeks, months, etc. So he would not do anything with his Coinbase account. He would use the knowledge he gained from the internal Coinbase documents that he was privy to because it was part of his job to then give that information to his brother and his friend, who then would make these purchases before the tokens were listed on Coinbase. Now, I mean, I don't know. Like Coinbase should have a security method to see.
I feel like they could still track large influxes of money.
Yeah, they would need to do what Kobe did. They would need to do what Kobe did and check off their own system. They would have to track the purchasing volume of these tokens and track the wallets purchasing these tokens before Coinbase lists them and then trace it from there, which, I mean, this is a huge multi-billion-dollar company. They certainly could do it if a random friggin' crypto investor...
Okay, I actually think that there is a defense for Coinbase here. I hate to say this. Generally, when a new token is listed, they usually do not have... It would be hard to... Because you have, especially if it was for sale elsewhere, there would be no point at which they could have got it on the platform early. So there will always be an influx of tokens. That's actually how they probably masked it. Even if they didn't go through that guy's account, they probably just transferred from another exchange, which is just how it works. In Coinbase's defense, I can't believe I'm doing this. That would be tough to track. But at the same time, I have to wonder if it was less sophisticated if some random fucking guy on the internet found. I don't mean any offense to him. It's just like, if he can find it, why can't you? You're worth billions of dollars. Do you not have a bloke who's like, okay, I'm going to watch the... You don't launch tokens more than like once a day, I'm guessing. Is it that hard to not have 5-10 people just watching the economy and saying, right, oh, that's strange?
These guys were being... Wahi's brother and friend were being tipped off on 14 separate occasions, apparently. This was going on since... when was this? When did this... this started in, I think, 2001, their insider trading scheme.
2018. Oh, no, sorry, that's the study.
No, yeah, this is... an insider trading scheme that went on, I think, for like from June 2021 to April 2022. 14 different occasions, 25 different crypto assets. Now, here's the thing, though. They were eventually able to tie this back to their product manager, Ishan Wahi. So there is some Coinbase connection there that they were able to figure out between those wallets belonging to the brother and the friend, and Wahi, the former product manager himself. Now, I don't know what that could be, except
it might be they played process of elimination with the projects he was on.
Right, maybe that could be the case, or Wahi's brother and friend could have did the dumbest thing imaginable, and they could have cashed out on Coinbase.
Yeah, I mean, there's definitely a level of like, oh wait, did his brother not get arrested? Because that would be so funny if his brother.
No,
him. Like, fuck you.
No, him, his brother, and the friend are all being charged with the same thing. I think Wahi, the former product manager, is being charged with 2 counts, whereas the other 2 are being charged with 1 count each of wire fraud, conspiracy, and wire fraud. They each face a maximum of 20 years in prison. So it's a.
They're going to get to be the poster child for this. But I don't know why we're talking about Coinbase listing securities, though, because there's a fascinating blog from June 21st. It's called Coinbase Does Not List Securities, End of Story. from the Coinbase blog from their chief legal officer, Paul Graywall. And let me just say, no problem. Thank you. Glad you said it. No longer need to check into the SEC fraud charges because you told me they're not securities. Thank you. Very good. Really love it. So apparently, reading down this like very short refutation to the point that it's like actually quite simple. So apparently 7 of the 9 assets included in their charges are listed on Coinbase. There's 2 that are not, which means this is the SEC starting the engine. This is them going, all right, you fucking children, we're going to get it. Took us long enough. And as I previously said, the SEC tends to not do things like this when they're kind of sure. They're doing this to get shit done. And the CFTC Commissioner Caroline Pham said that this is a striking example of regulation by enforcement by the SEC. No. One of the reasons the SEC is so fucking angry is because crypto's been around a while. They could have started making inroads and having conversations very early on. I'm serious. They could have, but you know what they're probably scared of? The SEC going, you've been so helpful. Anyway, these are all obviously securities, like we said. They just have been trying to hold this off, but now they've not made any meaningful inroads beyond the last few years with the SEC. They've really not tried. The SEC fired a few warning shots, or maybe it's the DOJ. I don't know how America works. To be fair, no, it was Congress. Anywho,
we're gonna get to Congress in a second because Coinbase. Yeah, go ahead. Yeah,
but to put it bluntly, let's wrap it up as Coinbase has not made the effort to try and work with the SEC. In fact, Coinbase has loudly and proudly been like, "Fuck you! Just we don't care. Regulate my anus. I don't give a shit. Fuck you." All Brian Armstrong quotes. You can Google them. But it's like they've just given the middle finger to the SEC and I'm not even being a pro-government guy here. It's just like, why are you surprised the most fucking petulant government agency, the one that comes after people, tramples on them, and goes, yeah, here's a press release about how good we are. Fuck you. Look at this criminal. Blah, blah, blah. Every SEC and DOJ press release is like genuinely dancing on someone's grave. They love winning and they love talking about winning. Why would you not try and head that off? Oh, I know, because Brian Armstrong made his billions already. All these fucking people got rich already. Door's going to shut behind them as they go off on some fucking yacht. They all go and try and kill the 3AC guys for sport. It's just so annoying because they either don't know and they're stupid, or they do know and they don't give a fuck. Like, they're just like, we made our money already. Who cares? But they're going to pretend to keep the lie going. That, oh, yeah, I mean, the SEC, they're being very unfair with these very obviously very similar to securities things we keep selling. Anywho, let's talk about Congress.
Right. Yeah, let's move to Congress because first, to get to Congress, we should talk about Coinbase's thanks to their founder and CEO, Brian Armstrong. Thinking of the wrong Armstrong for a second. Brian Armstrong. They sort of made a big, they made a line in the sand back in 2020, like fall of 2020, when it came to politics at the workplace. Now, This was even before crypto really blew up in the mainstream, and Coinbase was all of a sudden being talked about by everybody because Brian Armstrong came out right after COVID lockdowns and the BLM, the Black Lives Matter protests over the summer. He came out and was basically sick of politics being discussed at the workplace. Coinbase, their Slack, their internal systems, whatever. So he basically said, this is like a politics-free workplace. We're not going to be doing any of this social justice stuff. And if you don't like it, the door is over there. Goodbye. And, you saw the usual suspects cheering this, your tech VC saying this is exactly, the anti-woke tech VC saying finally someone doing this and, cheering him on. And
right.
And you remember that, right? It was like a huge thing, I recall.
I remember because I can't remember if it was before or after that Basecamp thing where it was like, we don't want any politics in the office. It's kind of like when they said it's like the bigger version of the Deadspin stick to sports thing. It's just like acting as if Labour can exist apolitically. It really cannot, especially material, like money Labour. Like especially this kind of specific Labour is so impossibly entrenched in politics. You just have to be a big Lex Luthor looking ass motherfucker to believe otherwise.
Right, right. And you know what? I might be I might be conflating the outrage between the Basecamp and Coinbase one. They both did the same thing.
Oh no, both of them got everyone mad.
Right.
To be clear, I definitely wrote newsletters about both separately, which means there was enough people talking about it.
I totally forgot about the Basecamp.
It's because it's all the same kind of miserable bullshit. It's the like rich guys being like, I want to fucking hear about it, you little fuckers. Right. And probably one guy who looks exactly like them being like, well, why can't I bring up race theory in the developers chat? Oh, why do I have to call women by their names versus sugar tits? The usual affectation I've been using for 10 years with no problem. Like it's probably it's James Damore bullshit, where these wimpy guys who expect the world to cater to them in the most specific ways sit there and go, fuck do I have to respect other cultures for? It's like as they go completely insane and get interviewed by Nelly Bowles about how they're the most persecuted man alive as they get national media coverage. Pardon me, I've gone on a rant.
No, it's all right. We're not even talking crypto here, but the overlap between the reaction is exactly
half-assed libertarian people.
Exactly. So you got Brian Armstrong, founder and CEO of Coinbase, saying no politics at Coinbase. If you don't like it, get out. And you know, they offered like a package to leave or whatever. I don't recall whether it was good or not. Who cares? The point is, no politics at Coinbase. Period. Fast forward less than a year later, I think like something like 6 to 9 months, and Coinbase is launching their own lobbying group with Fidelity called the Crypto Council for Innovation. And their own quote is to lobby policymakers and serve as the burgeoning industry's voice in championing the economic benefits of digital currencies and related technologies. And then if you want to know what sort of what sort of efforts they're talking about, just a few weeks ago, a new bipartisan bill, this is from Jason Brett over at Forbes, a new bipartisan bill introduced in the U.S. Senate by Senator Pat Toomey, Republican of Pennsylvania, and Senator Kristen Sinema, Democrat of Arizona, will enable will enable Americans will enable Americans to buy coffee with crypto without triggering a taxable event. It's called the Virtual Currency Tax Fairness Act, and it provides an exemption for gains of less than a tax exemption for gains of less than $50 on personal transactions and personal transactions under 50. And if you're wondering, by the way, how this bill does Toomey, Senator Toomey and Senator Sinema really just love crypto so much that they would just come up with this on their own? Of course not. Of course not.
No, Sinema was reading where the mail with the check came from for once.
Right, right. This is also from that same piece. The Crypto Council for Innovation weighed in with the support for the bill. We applaud the bipartisan leadership. Their legislation is forward-looking and focused on the utility of this new technology. With 1 in 5 Americans holding or using crypto, greater regulatory clarity will support the industry's next stage of growth. We look forward to helping policymakers on the work ahead. I mean, we know who's like pushing this stuff. Like I don't know if this.
Neither of these people have traded crypto once. They have no idea what it is.
Right.
Kristen Sinema was just thinking like her living space's credit card. Got to pay that down. Still got a Pier 1 as one somehow. It's where she gets all her hats. I don't know, but yeah, it just of all the crypto legislation that at least covers the this theory. The 3 people who will buy a beer with crypto and fucking hate it. They'll spend like 2 hours waiting for the Bitcoin network to just Oh, yep, your beer, and sadly, you are $3 short for your order because it took too long. Sorry,
Right.
man.
Right. And then before that though, now again, I don't know where this legislation directly came from, but we can guess it's from one of these crypto lobbying firms. Maybe it's FTX, maybe it's Coinbase's one. They surely are all supporting these legislations, even if they're not the ones directly involved with giving the senators this exact wording. But just a few months before the coffee one, you had Senator Cynthia Loomis, Republican from Wyoming, and Senator Kristen Gillibrand, Democrat from New York, working on bipartisan crypto legislation. And this one was to see the CFTC, the Commodity Futures Trading Commission, be the regulatory body looking over crypto as a commodity, and that's because they are much more crypto friendly, and there's much less stringent regulation on commodities instead of the SEC, the Securities and Exchange Commission, and crypto being registered as securities.
Except the SEC's already investigating. It's
Right.
just they can only throw so much money at this before someone from the SEC is going to say, there is smoke and fire and more smoke and more fire. And also, to be clear, they've not been lobbying for long. There are interests, in fact, I wouldn't be surprised, that would like crypto to not exist. Do you think the stock companies really fucking like crypto? No, they got the money where they needed to.
Right.
Like they got the money. Like all these people, if they thought it was going to, especially with Voyager and Celsius, do you think these stock trading companies, Robinhood, lost a ton of money on crypto? Like it's not actually a great product.
I will say, I think
they made money, but also it's not a consistent business. It is a business that is so seasonal. Do you want a seasonal financial product? Because that's fucking terrible.
A
volatile asset that anyone can buy and sell. Does that sound like something that financial trading networks, which already had a complete nightmare, like 12, 15 years ago, the day trading, when people just went fucking nuts on day trading and lost so much money. Do you think they want to repeat that again? Well, they kind of are already, except this time they can probably make it some form of illegal. And I don't think everything will be a security, but if it becomes prohibitively dangerous to make a new token, do you think anyone's going to invest in one anymore? Do you think that tokens in their pitch decks haven't had some sort of warning that this could become a security any moment, which will make your investment very annoying? Do you want, because that's really where my head's at. I'm just thinking, they're going to come for the tokens, and when the tokens are gone, ERC is kind of useless. The real question is whether they come for the big networks like DYDX, Compound, all them. I used to work for Compound, a long time ago, back in 2018. Volunteering that information, anyone comes to my balls, but it's but with these big name ones, if they get called securities, and this is horrible for the entire industry, even if when you create a token, it is not a security. If the SEC goes, that one, if they even make it just slightly more difficult, do you think lawyers are going to want to mess with that? That's the thing. The easy money is leaving the system.
See,
if it's going to be securities law, even if there is the theoretical chance of it being difficult, I believe it's going to stymie. But Andreessen Horowitz's $4.5 billion crypto fund might just sit in the bank for a while until Andreessen works out a new way to create a new thing to make him more money for some reason. Don't know what he wants.
Right. I mean, I don't know. I mean, I agree with some of what you're saying, and I totally get it. But I think there's too many, and there's certainly that sentiment from certain sectors of the old finance world who are just against this and are sort of doing the "I told you so" when this latest crypto crash happened. But I still feel like when you see all these these retirement fund companies coming out and saying, yeah, we invested crypto and lost some money, but we're still looking at it. We're recalibrating. there's still so many people and big companies too, I think, who are still sold on this idea that, yeah, there's going to be these stumbling blocks, but this still is the future. This is where it's all going. This is where it's going to be, because they're sold this constant VC marketing drivel.
Sure. And I fully agree. I actually agree with your perception. We both could be right, is what I'm saying.
Yeah.
There is just a chance that if you think about any investor, any VC, and indeed the limited partners of a VC firm, they are always engaging in risk analysis. And if they end up, because if this becomes a security, if a token becomes a security, and it is handled in a way that is illegal for a security to be handled, and me not being a securities lawyer, I cannot tell you what that is, but I know it ain't how crypto works. Freely tradable in a completely anonymous or pseudo-anonymous network, that alone is going to make the SEC not like it. Like, that is an unregistered security. I'm saying that if a limited partner was looking at a fund and they were like, we're thinking about more crypto tokens, it only takes a few of those LPs saying, I don't like this financial risk. This could become an investment that's impossible to sell. It will stop. Like, it's not just about American money either. It will mean, hey, this security, this unregistered, uncontrollable security, a lot of money's coming to it from China. Like, it's not even about what happens. It's the theoreticals that will drive people insane. Maybe I'm wrong. Maybe the SEC is wrong and is investigating nothing, and 9 tokens won't become securities and CFTC will take over. Whatever, I don't know. But I think something bad is coming with regards to securities law, or just precedent. They are not done sticking their finger in people's ears.
Bad for them, we should say. Yeah.
It's bad for any... I'm not even talking about the law here. Just take a step back. I'm talking about the money going into crypto.
Right.
I'm talking about the investments going into crypto and the limited partners that invest in funds that invest in crypto. And this is a somewhat connected thing. Advertising for crypto on TV, I believe, dropped from like millions to like 35 or like 85 grand in the space of a few months. Money is already leaving the system. If there becomes some sort of event that starts spooking LPs, I know this sounds very distant, but if the people giving the money to the people that invest the money stop wanting to put their money near crypto based on the fact that they think there might be oncoming SEC ruling, or just they will hold an investment that then becomes unprofitable because they can't sell it because I don't know, LPs will not want to put money in crypto. VCs will not, they may want to, but the LPs will say, fuck no. When they're trying to raise their second, third, fourth fund, the VCs, the LPs will say, I don't trust crypto. I won't be surprised if they're saying it already, but they're all like terrible. So they probably were like, well, it was good while it lasted. That's probably the more realistic conversation. But, oh boy, I just really see this as an opportunity where I think that if money starts leaving this system at speed, you will see, if not a sell, I don't even think it will cause a sell-off. It will just mean there will be less new crypto stuff. Now, you might say it's a good thing. Careful now. Because if there's less things, there's more, the SEC can cover more ground. And the real closing argument to make is they really want to. They are motivated. They don't like crypto. They do not like it, right. Which means that if it's not today, they're watching. They're sitting there waiting for the opportunity to say, we got you. They're going to be watching from now until either Coinbase goes under or the SEC goes under, because they do not like them. Otherwise, now, to be clear also, there is also an investigation into every US exchange. I forgot this one. The SEC is not just investigating Coinbase for unregistered securities. It's also Binance and every other US exchange. That's also not great news, because this is the equivalent of saying, yeah, right now, Yeah, the Nasdaq and the FTSE 100 are kind of being investigated for possibly insider trading with their own things they list. It's not a big deal. Yeah, you might not invest in stocks as much. You might be scared that the market is corrupt. There dumber things have spooked markets before. In crypto's case, it won't spook the market. It will just start killing money into it, which will take longer to manifest. And when it does, it will be a slow stop rather than a big hit. It will just, the wind will fall out of the sails. Maybe not completely, but enough that the meaningful investment in crypto in the US will drop meaningfully. Like, I don't have any money in it anymore because it sounds dodgy, but it's just also like this is very clearly going to become bad. This is going, there is, if it's not now, it's in a few years.
Right. Absolutely. I mean, the sad thing is, I feel like, this is something that we say all the time, and something that's been said. And then all of a sudden we got, as we saw, these regular comebacks with the crypto industry. Like, this happened with the ICO stuff. This was like 2017, and then fast forward to you had this latest boom, and then before that there was that boom, but then it was all in like the early 2010s. That was all hit after Mt. Gox. Like, crypto has constantly gone headfirst crashing into a wall, yet the industry has been able to bounce back consistently with the idea of these are just the normal stumbling blocks for the thing that is going to be the future. And they successfully sell that shit each and every time. So, I know this one would be a lot different due to the legalities involved and the law being involved, but I still feel like they would...
That is the only thing that matters.
Right. I still feel like they would find a way, though. They would find a way to recalibrate. I think it would be, we wouldn't see the same players, or at least all the same players. They probably wouldn't be making so much easy hand over fist money like they've been. But there's still going to be this, because as long as crypto exists, it's taking advantage of people. Like, that's the main thing people need to understand.
Yes.
Like, no matter what the law does to rein this in, as long as crypto exists and you are investing in something that is basically hot air, nothing. There's no voting power. There's no ownership in some sort of entity or company or whatever. If you were just investing in something because other people view it as valuable, because they think other people view it as valuable, because they think other people view it as valuable, you are investing in nothing. And as long as it exists in that way, and that's all that crypto is, it's inherently an industry that's built on making money off of taking advantage over other people without also simultaneously making or creating anything of any utility at all. Like, sure, you can say there's a lot of industries out there that part of their revenue model is taking advantage of people. That's horrible, sure, but you could sometimes, at least in this horrible capitalistic world we live in, you could sometimes try to make the cost benefit analysis make sense, because they put something that's equal or okay in value or something good out there in the world in return. There's no argument to be made even for that here. It's just you're doing nothing in this industry but making money off of other people losing money.
Yes, but there is a big, fat, honking difference between Mt. Gox, between any of this stuff, and what is happening now. Because before, there were no laws. Now, laws might be created. Regulation will be regulated. It's definitely the right verb. It's what I'm getting at is, before, there was nothing to kill it. Tell you what, open up Robinhood and try and buy a margin call on a stock that you can't buy it on. It simply won't appear. Now, that may be because of the different... I actually don't really understand why that is. I'm sure there's a good reason. But with margin, you can only get so much. What I'm getting at is, that's because there are laws and regulation. Because Robinhood, like a lot of companies, is deadly afraid that the SEC will fucking kill them. Because stocks are highly regulated because of literally everything we are discussing. Crypto might maneuver, but what use is every single, like, taking a step back, of all of the projects that are out there that get the attention that are popular, like fucking Axie Infinity or whatever, all of them rely on being ERC20 tokens or using 721 NFTs, right? Now, NFTs, I think we're solid in that I don't think NFTs will become securities. ERC20 tokens, though, if they're able to, that is the fundamental part of cryptocurrency that is not just money. It is the only abstraction outside of capital that crypto has. What fucking use is playing Axie Infinity if you are trading securities? Because that is what they are actually afraid of. It's not, oh, Ethereum will get made a security. It's my bing bong points in Bang Bang, this Ponzi scheme I play that I think is a game. If that, Helium, we haven't talked about Helium, but Helium, if, what is it, HLT, if they get made securities, you now have a box that makes a security? Oh my God, does that make you, I don't know, a broker? Like, what the fuck is that? Did you just create a security? Did you create a stock with a hotspot? Because I don't even know what law that breaks, but I'm going to guess that's illegal. But that's what I'm getting at. It's not about what happened before, and they want to keep people excited. So it's always a down market. Anthony Pompliano blowing out his asshole, talking about, oh, well, now's the time to invest. Now's the time to be able, fuck off. But also, for real, all these people want to do that. I actually don't think Pomp has really talked about securities much, because the reason no one wants to talk about it is the same reason no one talks about people killing themselves in Vegas. It harshes the flow of the casino. I'm deadly serious. This is the boogeyman. I know you might not agree, but this is the real fear. If they make a ding-dong, a rally token, a security, these products, the only product that crypto has, as useless, as nebulous as some of them are, as completely unlaunched as some of them are, oh my God, that if they all become securities, that's really fucking bad. Your apes may be gone, but if you have ApeCoin and that is a security, and I know they've only said it's 9 of them, do you think they're going to go, we got 9? Wrap it up, boys.
Right.
I'm going to put dinner in the oven. No, they're going to use that as precedent to work from and fuck everyone up. I know I'm being expletive, saying expletives, I should say. I know I'm being aggressive here and like conspiracy adjacent, but I'm not wrong. You know what? If I become wrong and these aren't made securities, nothing happens, I'm actually confident they will in the future, but they would not, I must be clear, they would not announce it if they didn't think they had at least some case for it. And it only takes one. Once it becomes one, look how quickly Coinbase posted that. Right. Also, their comm strategy is total dog shit. Just awful way to respond. You sound snooty and rude. You should have said fucking nothing. Literally nothing. Having a blog called, like, Coinbase does not list securities. It's quite literally that tweet about the I'm not involved in human. Yeah, my shirt that says I'm not involved in human trafficking gets me a lot of questions answered by the shirt. It's very much saying, I mean, this doesn't allay my fear. It's not like anyone. Only the dumbest man alive would be like, nah, they're right. Nothing to worry about. SEC's full of shit.
It would be great if there actually are Coinbase printed up shirts out there that say Coinbase does not list securities.
Oh my God. If you're a viewer and you get me one on it, if that's a real ass Coinbase shirt and you get that to me, I'll give you $250 of real money.
You what?
I'm going to make that shirt.
I'm about to say, I'm thinking about doing it. Get the first Scam Economy merch.
I'll buy one.
I'm going to print that up. Yeah, Coinbase does not list securities.
You get sued by Coinbase.
Hey, sued by Coinbase, it's parody. Bro. It's parody. It's based off that joke. I'm parodying the joke.
Yeah, and then Mike Jin sues you for the tweet. It becomes a really long lawsuit. But yeah, anyway, sorry, I've gone off for 4 hours.
This is this conversation. This isn't like, other episodes I feel like of this show so far. We've done about 26 episodes now. it's been like, here's the story, this is what happened, and here's everything that happened. But with this episode of Coinbase, we're talking about something that is ongoing, and not only ongoing with like, I'll give you an update in a month or two when this is all wrapped up. We're talking about something right now that we're probably gonna be able to look back on in like 2 years and still try to make sense of everything. Like, this is going to be something that is an ongoing thing in the crypto space as long as it lasts, which I think is going to be a very, very long time, sadly. But before we wrap up here, there was a piece you sent me from Frances Coppola, who we've cited her stuff before. I gotta get her on this show. She's great.
She is awesome.
Yes,
she wrote a great thing on Voyager as well.
Yeah, I've been meaning to actually get her on to talk about the Lightning Network, because I know she did really great work on that early on. And I haven't done an episode on the Lightning Network yet. I've been really meaning to, because that's always, I'm going off on a tangent here, but that's always like one of the things that people always like, that's going to change how Bitcoin's used. But that's for another episode.
Make Bitcoin, instead of slow, kind of slow.
Right. But that's for another episode. So you sent me this piece from her about Coinbase's balance sheet, and I think it ties in really well with that rant you just went on, and is the perfect way to wrap up here. Because honestly, I read it a few times, and I get what she's saying, because she's so good at breaking this down. But holy shit, is this really like deep in the weeds and sort of confusing if you're not like a finance guy or gal.
Do you want me to? Shall I lead us in?
Yeah. Why don't you break it? You probably understood it better than me, honestly. So why don't you?
Oh no, I just read it like 7 times before talking to you. So, long story short, there was a staff accounting bulletin within the SEC that talks about recently adopted guidance that basically says, long story short, that cryptocurrency exchanges must hold 100% of customer funds separate to and hold them 100%. That is more than a real bank. So it's really, really bad. It doesn't cover custodial funds, so like institutional. It just covers regular people. So now Coinbase's balance sheet was massively inflated previously, to quote Frances's title there, because they were previously able to take those funds and just shove them fucking in there. That's our balance sheet now. This is us.
It's not.
No, that's not yours. It has to sit there. So, previous rant, by the way, look how scared Coinbase got of a single staff accounting bulletin from March. This is how scary the SEC is. They sent out, it's still a legal thing, I'm probably mangling the exact law thing here, so just forgive me, audience. But the really specific thing is, this was a staff accounting bulletin. This did not get press, and yet Coinbase changed their business, how they did their balance sheets. That is a public company with billions of dollars that's changed how they did business in a huge what is it? I forget the exact form when you're a public company, but they're 10Q. They had to change their fucking filing for their public company. Like, this is not a small deal. Francis is incredible for finding it. It's about 2 days ago, so August 15th. This is really bad, by the way, because also, you motherfuckers just keeping all the money together. Got to worry about that. So and there's another little wrinkle to this. They cannot hold, I don't believe they can hold customer funds in riskier assets. They have to hold them in like either what the customer bought or something adjacent to it, which I imagine is like real money. Now, going back to one of my other conspiracy theories. So just to be clear, this was like a meaningful, massive inflation of a balance sheet. Around mid-July, Coinbase also combined the order books on Coinbase with USDC and real US dollars. There is now no differentiation between them on the platform. I mean, I don't know if it's actually anything, but all I'm going to say is this is an insane way to run a business, full stop. But also, the wheels are coming off, but also Coinbase is willing to change their business based on the SEC. If the SEC goes, these are securities now, if they scare them enough, those They will disappear, as will anyone that Coinbase believes. You're talking about crypto never stopping. You're completely correct. Just may become very hard to do in America, or very slow.
Yeah.
You just won't be able to. There will be rules. I actually don't know the in-depth rules about securities, but there are limits. There are limits to who can operate with them and standards by which holding them. Like, I don't believe you can just hold a stock in a private wallet, for example.
Right.
Like, I don't think you can do that.
Right.
Like,
Here's one piece from Francis's piece that really stuck out to me. You broke it down perfectly, but there's one extra thing here that stuck out to me specifically here. Is she says that no longer can the costs of hacks, security failures, bugs and exploits, rug pulls, scams and frauds be dumped on customers, which means that according to these SEC rules, these new rules from earlier this year that Coinbase is now abiding by, and these are guidelines, I should say, not rules, because she also points out that these need to be rules with penalties. Right now, these are just guidance. But basically, the SEC is saying if your customers lose something, if you're keeping your money with Coinbase, your assets with Coinbase, and there's some sort of security failure or exploit or scam or bad code or fraud or whatever, Coinbase is liable. It's not the old way of crypto where you're shit out of luck. It's on you, the customer.
To also be clear, they cannot just hold insurance either. Like, they have to hold the equivalent asset. If I don't know, I'm not accusing Coinbase of anything, but if they were doing any dodgy business, they would probably have to stop it immediately. And also, they are losing a lot of money that they now can't touch those customer funds. Don't know if they ever were, but like, that can no longer count in their balance sheet, which means that their stock is probably going to eventually realize this when people rub their brain cells together. And also, just on a very basic level, fuck me, can you run a company properly, please? If you've got money in and you're like, it's a volatile asset, just put it in the bank. You don't need, like, that's actually a good question. Was Coinbase speculating? I don't think they were, but Voyager and Celsius were. And quite frankly, like, I don't know if a US company would be that stupid, but all in all, Coinbase appears to be run quite poorly as a company. And that is the one thing I can say with 100% certainty, that there is literally just this company is run incredibly poorly because there are no regulations or rules. They just ran it on vibes, what felt good at the time. Yeah, sure, fuck it, sounds great. Bing bong. I'm Brian Armstrong. I love money. Like, like, they flouted regulation until it became inconvenient to do so, and the fact that they reacted to this likely means they believe the SEC has a strong case that they should do this. I wonder if Binance US is doing this. I wonder if I was about to say FTX. I'm like, is Crypto.com American? Like,
here's the thing too. I think to really sort of tie together the whole thing with what and wrap up what you're saying right here. Mm-hmm. All these companies that you just mentioned, all these other crypto exchanges, I feel like if Coinbase is doing it, then without a doubt they are, because Coinbase has been, for good or bad, held up as the standard. Like, this is like the most legit exchange. Like, they gotta be doing everything right for them to be leading the charge in the US, where, this is the wild, wild west here, the crypto industry. But in order to get to number one in the US, probably the one place that does have some sort of whatever little oversight there is in the crypto industry, it's probably here. Coinbase, to get where they are in this market, they need to be doing things by the book and being as legit can be. Mm-hmm. And they've sort of been coasting pretty well off that either, deserved or undeserved belief about Coinbase. And here we are now discovering that, Coinbase isn't on the up and up everywhere. In fact, here's a shitload of controversies all in your lap at once. So, I mean, you gotta believe the other exchanges are all doing not only something like this stuff, but they got to be doing even worse. Whatever the worst we're gonna find out about Coinbase, I feel like the other exchanges are gonna top it.
And to finish us off, here is my wild-ass prediction of the episode. I believe a major exchange, not in America necessarily, will go insolvent in the next year. Come back if I'm wrong. You're getting nothing. I will just claim it will happen 1 month perpetually until it does. But that is my new suspicion. Because I do not believe. Well, it's very simple. If Coinbase has to do it, and they are the most legitimate, and they were still doing it in a dodgy way, do you really think random exchanges in like Asia or like the Bahamas or anywhere, do you think they're really doing things up by the book? Right. Especially not specifically referring to any Bahama-based exchange, one that deliberately reduced their holdings in Voyager so that they were below the line of a certain reporting level, so that they didn't have to report certain financials. Could be talking about anyone, of course. Right, I'm not saying that one's going to go insolvent.
Could be Gemini, Kraken, Crypto.com.
Gemini is the one I actually have the most faith in for some reason. There's something about the Riverboat Twins.
Even more so than Coinbase.
Because they deal with so much in institutional money, and people I know that are actually very good, like cryptography people who deal with the like corner of crypto that's respectable, the ones where it's basically just like trying to find like criminals mostly. They're the ones who go, Gemini's actually trustworthy.
Wow.
They're all right with
folks, breaking news. You heard it here first. Ed Zitron,
based on the anecdotal evidence of a small sample of people I've talked to, my strongly held belief.
No, you're not going back on this. Folks, breaking news. Ed Zitron, big fan of the Winklevoss twins.
I love the, you need to read the Clickhole Facebook oral history if you really want to know what I think of the Winklevoss twins. Go Google that after this. It's the best thing you'll ever read.
There you go. And they'll be able to go Google it right now because Ed Zitron, CEO of Easy PR, author, writer, owner, publisher over at the easy.substack.com newsletter. Where can people? What else would you like to? You want to tell people what the next article is? What's coming up? It's Ed Zitron over on Twitter at Ed Zitron. But anything else you wanna name drop or promote? Go ahead.
I'm about to write something probably about the term quiet quitting, which if you use that term, you are my enemy.
What is quiet quitting? I guess we'll have to find out.
Please don't make me do this.
We'll have to find out in the piece.
All right, then. Thank you for having me.
Have a great night, Ed. Always a pleasure.
Cheers.
And right after I recorded this episode with Ed, he tweeted out, just recorded my most intense scam economy interview yet. I think we could all agree that Ed was on fire. He continues, including several theories that will either make me look like a genius or a complete crackpot. I'm actually trending towards the former, but I guess on that we'll have to wait and see. Folks, as always, patreon.com/MattBinder if you'd like to monetarily support this show and help it grow. With your subscription funding, I would like to bring some people on board, help disseminate the content we're already creating even more, and create more content too while we're at it. You can also support this show by subscribing to the YouTube channel at youtube.com/MattBinder, following the Twitch channel at twitch.tv/MattBinder, and if you're an Amazon Prime subscriber, be sure to connect your Amazon Prime account to your Twitch account so you can get a free Twitch Prime subscription each month. What does that mean for you? You can give me, at no extra cost to you, a paid Twitch membership that's at cost to Amazon and help out your favorite creator. And again, I'm telling you this because I hope that favorite creator is me. But if not, be sure to give it to someone you enjoy on Twitch, because otherwise Amazon just pockets that extra money and we all know they don't need it. Be sure to go to scameconomy.com for all the links to where you can subscribe to the podcast version of this show. And while you're at Apple Podcasts or Spotify or wherever you listen to your podcasts, be sure to leave a review. By leaving a review, you help push this show up the rankings on that platform, which in turn helps people who don't know about Scam Economy discover Scam Economy. You can follow me on Twitter at Matt Binder. You can follow the show on Twitter at Scam Economy. And with all that said, there's nothing else left to say, but I'll see you all next time on the Scam Economy.